reshaping global capital flows. I mean, this is the asset owners, the money men, whatever way you'd like to describe it, but they are the deployers of capital judiciously with a sovereign purpose, with intent. On panel with me is His Excellency Sheikh Abdulla bin Khalifa Al Khalifa. I don't think he needs an introduction. He is the Chief Executive Officer of Mumtalakat. Hazem Ben-Gacem, founder and CEO of BlueFive. We have Andrea Bonomi, Chairman of Investindustrial, and Behdad Eghbali, Managing Partner, Co-founder of Clearlake Partners. You may know a few of the assets that he has deployed into. So private markets, what have we got? Okay, so there's the monolithic headline, $15 trillion, size of the market. Private credit, 1.8 trillion. Has it had a wobble? Will it grow in this region? The view is from PwC it could grow from what is nascent at the moment, 3 to 4 billion, maybe to $30 billion, I think is the kind of numbers that they throw around. So it's about where do you want to deploy the money? How are you managing in a turbulent time? I started the session by talking about not crisis, but chassis, which is a difficult time, it's a difficult year, it's difficult to navigate. How has it shaped your thinking, Excellency, in terms of global investment, and how this region is now perceived in a new paradigm geopolitically as a destination for capital rather than just writing the check, sir? Good morning.
Good morning, and I'm glad to be here, and thank you for the EDB for organizing such an amazing event, and also to be part of such an esteemed panelist. Of course, for us, we're a bit lucky. We're in the middle of one of the booming markets. The GCC today has a lot going for it. It has economic diversification, it has growth momentum, and it has structural reforms. And if you look at the latest numbers, and you've covered it in this morning's session as well, GDP just doubled that stood about 3.2, it's going to grow to 4.5. Capital markets are robust. Debt markets have raised over $1 trillion. Yes, a lot of it is from governments and banks, but we're seeing a lot of corporates also tap the debt markets. Capital markets, we had, in this volatile environment, we had 50 IPOs. That's 13 billion. And of course, M&A and venture is maturing, and we have almost 30 billion of transactions last year. So very bullish about the GCC. We're seeing quality deal flow, and we're looking to invest.
Hazem, good morning.
Good morning. Good morning, everyone.
We caught you short there with the bottle of water. How do you see the world? How do you see the flow? Because I started panel one talking about capital, destination for capital rather than the writer of checks on a permanent basis. You're newly minted. You're fresh at the coalface. So describe to me how you see the environment at the moment.
Sure. Well, first,
the flow show.
Well, first, let me thank the EDB for hosting this most incredible setting and this incredible background here. Sheikh Abdullah started his talk by saying we are a little bit lucky because of the macro dynamics. I'm going to start with the same thing. We are lucky. Why are we lucky? Because as an asset manager, we had the honor of having Mumtalakat as one of our founding shareholders and backers. And that is an important theme that is consistent, and that the sovereign institutions in Bahrain and in other parts of the GCC playing an active role in developing the asset management infrastructure ecosystem. Why is that important? The asset management ecosystem is a driver for capital. Why is that important? For a very simple reason. The geopolitics of the world today means that there's a rerouting of trade. Usually with rerouting of trade, very soon you see a rerouting of capital. And this is very much what His Excellency Sheikh Salman was saying this morning, the GCC as a hub between the East and the West. And this is where we are excited, using this part of the world as the hub, as the platform for investing East as well as West.
Andrea Bonomi, good morning. I think there's a brilliant line. This gentleman personified what his company, one of his biggest assets is. Private label food. I leave you the killer line. But how do you see the region? Maybe you can give the killer line and then tell the audience how you see the flow of capital at the moment. Good morning.
Good morning. Good morning. Thank you for having me. When you say we're lucky, we are lucky if we work together on this, because lucky is not when you have competitors appearing, even however you are established. So you have to realize that this region, this country, is going to become a center for development in the future. So it's not luck. If you're sitting in Europe, if you're sitting in the United States, and you think this is a one-off or a nice to have, this is not a possibility. So what has been built in the region is something which is long-lasting, and this shift from being an investor to being a partner, to being a partner in building the future, is actually a shift which is happening and has momentum. So it's a major shift in the private equity industry over the last few years.
Behdad, good morning to you. Again, just set the stage. You're well known for certain deals, but we're here to talk about how you see this region and the opportunities. And I asked you, how did you know His Excellency? And it's one of those moments in time where you met on a 24-hour trip, and kind of that has evolved. And I think that's the personification, I think, of doing business here, really, isn't it?
Well, again, I wanted to start off by, thanking Your Excellency for hosting us, Kingdom of Bahrain, His Excellency Sheikh Salman for hosting us. Great to be here. We're lucky to have this background behind us, but I think to stay on the same theme, I think there's been good execution by leadership in the GCC and the region, right? To your point, historically, the region has been a source of investment, source of capital for alternative assets globally in US and Europe. I think we're fortunate. We have 60 some odd countries invested, 450 plus institutional investors. So I think the region continues to be a source of capital and investment globally, but to your point, past decade, 15, 20 years has become a net inflow for jobs, for human capital, relocating from Europe to the region. Region is obviously blessed with natural resources, but the good execution of the leadership, frankly, I would say across the GCCs, led to companies, asset managers, frankly, looking at the region as an investment opportunity, growing population, safety, schools, great schools, healthcare, good environment to be in. And again, I think we're seeing more people want to be here, more human capital want to be here, which ultimately will, lead to a lot of good opportunities of investing within the region. And I think we're still in the, depending on the sports analogy you want to use, we're in the 20th minute of that evolution and of that growth. And the future is bright. Despite all the noise, despite all the geopolitical headlines, economically, the future in the next 50 years in the region is quite bright.
And this is, Your Excellency, this is about differentiating. Look, I talked about cooperation between the GCC in the first panel, but this is also an opportunity really to differentiate this region relative to the rest of the emerging markets, and that's incredibly important. I see you walking around out there chatting to a multiple of different people, signing new deals. So how does Bahrain, how does this region differentiate itself, let's say, to the rest of the global south in terms of the deployment of capital here?
No, so maybe I step back here. So we at Mumtalakat, we're custodians of almost 60 companies across all industries. And what we're doing here is we're working with these companies to create value creations, but growth plans, but more importantly, working with partners to elevate these companies. And as mentioned this morning, the private sector is someone that we're basically bringing with these companies to create joint ventures, to create exciting businesses. And here I'll give you a few examples. So, with Racing Force out of Milan, they wanted a manufacturing hub to produce Bell helmets and OMP suits. We spoke to them, participate in their capital, brought all their manufacturing here. With M42 in Abu Dhabi, they had a healthcare business that was expanding in the region. And we said, you know what, let's de-risk you as the sovereign, set up a joint venture together and do that business together. So there's a lot of healthy deal flow that's basically competing with capital. And we're finding ourselves not allocating to outside, but allocating here because of merits, because of investment returns, and because of the opportunities.
do you see, just before I talk about the flow of capital, gentlemen, I just want to pursue a little bit more with you, Your Excellency, in terms of, obviously you've done some other deals, we know in terms of taking full ownership of McLaren. Is this where you're going to be more active, both domestically and more active participant in the deals that you do?
That's basically the core of what we do. I'm learning from these guys, and the private equity playbook is something that we do every day. And as you mentioned, some of the transactions that were headline transactions,
yes,
recapitalizations, have resulted in a record year for Mumtalakat in terms of returns last year. And we're also placed very well for another good year this year. So, on back of these transactions, we're seeing a lot of value creation that's being monetized and that's being created.
It's going to be interesting to see in terms of those monetization events. Let's turn to your peers on the rest of this. Let's put them under a bit of pressure in terms of the flow show. What I'm curious, and I think that this room is curious to know, Andrea, I want to come to you on this. One big theme, both in FII, and I'll pursue it in ADIPEC, and here I am at the weekend in Bahrain, is about de-risking. His Excellency talks about de-risking some of the corporate opportunities, but how is the world looking at the US dollar? How is it, are we de-risking from the dollar incrementally? Are there fractures in the world in terms of the flow of dollars around the world?
It's becoming very complicated. If you want, in our case, we have about 70,000 people. We have almost 300 plants around the world, so there is a natural hedge, if you want. But the de-risking is the key word at the same time as you have growth. So globalization is on fire. It's a very strong, globalizing a company, globalizing your sales, has never been as strong. At the same time, you need to de-risk your supply chain, whether it's even the currency in which you trade, whether it's a dollar, who you buy from, you have a massive de-risking of the supply chain. So it's a very positive moment, even though you see it very complicated. So the companies that entered this cycle were not ready for a world where you had a US bloc, a European bloc, a Middle Eastern bloc, and an Asian bloc. They were not ready in having knowledge of the local cultures, so they are panicking as they de-risk. And you must imagine an entire de-risking of a supply chain at the same time as you have a technological change with AI, which is going to change, and you have at the same time your number one markets, which are sometimes becoming the Middle East or Asia. So if you take, we own Zegna. Zegna, the number one shop in the world is in Dubai now. So it's, at the same time, China is in a subdued moment. America is on fire, but there are tariffs, etc. And then you have, sustainability, you have technology, you have all these changes. So it's a moment where from the outside, it seems like chaos. But the leaders will come out of this particular restructuring better organized, safer, with completely different headquarters, which may be here in Bahrain.
Yeah.
It will be a completely different world. So the old, you spoke this morning with the mayor of London. He went out of his way, we're 800,000, we are, etc. He's not having a really good moment. I mean,
Andrea, we don't need an Italian British feud.
No, well, we are having a good moment. Exactly. But I'm saying, it's for the kings of yesterday, this is a moment of change, and you need to be very, very careful what you do in the next few years, because leaderships will change, and private equity models will also evolve, and who knows? Maybe it will be here. It will be here that the new world will be built.
And I'm going to come back to His Excellency and ask him how he puts that stake in the ground globally. But Behdad, for you, I mean, the media, us, made a great deal out of sell the dollar. And there was a huge amount of selling of the dollar at the start of the year, because there was a huge amount of over-allocation to US dollar and US assets at the start of the year. That has calmed down a little bit. It was the worst start to the dollar since 1973. It was a pretty bad 6 months. Are you de-risking or how would you describe your position? If Andrea sees it as a moderate de-risking, not a deglobalization, how do you see the flow of capital in that perspective, from that prism?
No, it's a fair question. I think to Andrea's point, the supply chain, kind of diversification started with COVID, has continued largely. I would say, notwithstanding the headlines of a lot of the tariffs, the U.S. administration seems to be more pragmatic, more reasonable around, forming, maybe a more pragmatic co-opetition relationship with China. That was a big risk. I would say 18 months ago, uniformly, both sides of the political aisle in the U.S. was strictly, pro a harder line against China, as we've seen with, I would say a lot of the recent news. I do think the administration is more pragmatic, which is, despite the headlines from March and April, it's quite positive for global trade deals and maybe a slightly realigned, diversified supply chain, but a more pragmatic approach. I would say a lot of the innovation, and let's get back to AI, right? AI is really a step function, innovation around, much like computing or mobility or whatever else was, that is going to impact, I would say, both the cost and the top line globally. A lot of that innovation is happening, frankly, in the U.S. is going to be exported, and in Asia and in China. So I think you're going to see, in a unique way, that really step function technology evolution affect, trade and affect companies in the region, in Europe, adopting.
What has it made you change? I mean, you talk about, the levers of foreign policy are structurally changing from chip and tech, to defense, to the US technology stack. Secretary Bessent on Sunday, I think it was with Margaret Brennan last Sunday, if I'm wrong, forgive me, but he made it very, very clear. They want the world operating on the US technology stack. 3 levers of global foreign policy. What's it forced you to rethink or redo before I come to Gazem? Because you've raised a heck of a fund, and I want to touch on that in a moment. For you, what's it changed? How do you look at the world through that change?
Listen, I think
thread the needle carefully there, Behdad.
Yeah. No, listen, I think, sure. I think the U.S. technology stack is relevant in our investing. There's, I would say, a parallel technology stack developing in China and Asia that's going to be exported. I think, consumers of that technology stack will, just like the diversified supply chain, will, diversify technology stacks. Again, by having said that, again, looking at TikTok and the TikTok transaction, that's an example of a lot of headlines that ultimately ended up probably in a good place of a technology that's widely adopted. It's got a big utility, and there's ultimately going to be a deal. There's going to be ultimately a deal where 100 million U.S. consumers will have access to it. Maybe that stack is, subdivided, treated, and protected. So I do think the future is going to be more around partnerships and maybe co-opetition and competition, but a global universe as opposed to this kind of dark view that, hey, everyone's going to go their separate way and we need different stacks ultimately.
Hazem, you've just raised one of the biggest GCC funds. What goes through my mind when we're chatting in the green room, do you think it was easier to do that this year, given the state of chassis that we have in the world? Because it makes the destination, you as a destination for capital for the GCC, did it make it easier to raise? Because you've been in this business a while.
So let me try to address it within the context of the same theme of de-risking. When we think of geopolitics, the first thing we think is China, US, and all that tension. But let's go back a few years back to the Russia-Ukraine war. That has made a very profound reality, at least in my view, which is having a profound impact on investing and where money is flown. That has made it clear. Talk about risks.
Yep.
Risks of access to energy, food,
Absolutely.
access to the monetary system, and access to digital infrastructure. Historically, at least post the World War II phase we live in, we're very used to commingle. You get oil from here, food from there, digital XYZ from someone else, and the world lived in a ecosystem which kind of coexisted. Many of those 4 areas I've touched on, energy, food, monetary system, and digital infrastructure, has been weaponized. When that happens, you start to worry about yourself. Yeah. So that's why, and by the way, the digital infrastructure is a very, very important one. Today, probably it is 10 times more powerful to shut down a certain nation's access to data centers, of which everything relies on, than it is to throw missiles or whatever it is. 10 times more impactful. So that's why what we are seeing, and what's a big driver, and a lot of what we focus is the global south. Food security, energy security, financial system security, and digital infrastructure security is a profound area which every single nation outside the West is investing in. And that is the role, and this is big money. And that is the role which I hope the private sector, like ourselves and everybody else on this panel and others, and the public sector would need to work together to de-risk a lot of these 4 fundamental areas.
And this brings us back nicely, sir, to how you interact with global investors at this time. It puts you in a pretty unique position with a pretty unique story to tell, doesn't it?
It does, and I have the luxury of saying I'm long-term, so all this is noise, and I buy good businesses, but
you're a duration play. These other people might talk about it. You're real duration.
Yes, yeah. But let's, joking aside, the core of any partnership is, it's built on 3 pillars. Great governance, mutual benefit between both entities, and an alignment of interest in terms of what we're doing. And for us, private capital brings a lot of discipline, a lot of funding.
Mm-hmm.
Sovereign wealth fund and strategic capitals bring long-term view and also de-risking. So it's the perfect marriage, and it's the perfect partnership.
Who's learning from who then, in terms of that relationship between you, the sovereign wealth fund, and the protagonists on the panel here, if I can call you that, gentlemen, with a gentle joust. How important is that relationship, Your Excellency, the partnership of international private capital, which is on this panel, and you as a regional strategic investor? Do you see that just growing more and more, and the potential?
No, look, I don't think anybody's learning from each other. I think they need prerequisites, we need prerequisites. We need experience and funding. They need planning and execution. And today, we are a region that's executing well. And I think that's been missing from the world. And I think all this private capital and all this international investments not only look at the capital that we have here, but look at the growth policies that we have here. Look at the teams that are delivering on big projects. And I think that's the relationship we're forming. We can't do everything on our own. We don't have the funding to do everything on our own. We would rely on foreign capital to do a lot of these projects. And I think from their side, it has to be a mutual benefit for them. And I think they get comfort that they're talking to stakeholders that they can deliver and they can bring value to the table.
Well, certainly, I think that thought process of splendid isolation, it was a British foreign policy at one juncture in the 1800s. I think the world is so irrevocably changed. Let's change the pace a little bit. Let's give this audience some fast takeaways in terms of how you see the biggest opportunities through where you are. Industrial, tech, for you, TMT, 90 odd billion, huge proportion that's in TMT. Hazem, let's speed it up a little bit. Let's get the top calls from each of you in terms of where you see the biggest opportunities, and then we'll revert to the cockroaches that Jamie Dimon is seeing, but other people have told me that they see no vermin, and get the terminators in when it comes to private credit. Hazem, biggest opportunities.
In the GCC financial services industry, too many very, very, very small players across asset management, insurance, leasing, and many other products. Consolidation across financial services industry in the GCC, it's long overdue. and someone will do it sooner or later.
Oh, this is going to get interesting. So you two very aligned then in terms of a strategy for pulling the trigger.
That's why we're founding shareholder in BlueFive.
How ready are you to do a financial services deal? I mean, it sounds like you want to buy a bank or an asset manager. If you had your choice, which would it be?
Pass.
I need to be careful. There are some bankers here. And
Next.
You can
Well,
glide
let's put it
over
this
that.
way. Something you get to know about the Middle East is things get done quickly.
Yes, they do.
No bureaucracy, no wait, no humming, puffing, things get done. So we will take the same DNA, which Mumtalakat and others have, and we will get things done very quickly.
I've seen it happen before overnight. Andrea, this man makes more macaroni and pasta than anybody else in the world. There you go. And he sells it to the Americans as well. You gotta love it.
Yeah.
Right. Where is the biggest opportunity, sir, for Investindustrial? Where do you want to, which direction do you want to go in?
It's industry. The whole region is moving from being a place where you sell, so we still have Zegna, Tom Brown, Tom Ford stores, or Italy food halls, to industry. We just invested in the kingdom next door, in the leader of ketchup and vinegar. We're putting, this bottle, the aluminum comes from here. We make the bottle cap, if you want. Industry is shifting to this area of the world, and it's an industry which is new plans, have technologies. You're going to do partnership with family businesses. This is an area where families are still very, very, very important, and where companies are mid-size. It's very difficult to move a mid-sized company, which is where most of the technology exists in Europe, to this area. So that is the biggest opportunity. If you manage to build the bridges and sovereign funds, you underplayed who learns from whom. The sovereign funds all of a sudden have become your #1 most thoughtful investor. Most of your capital may still come from pension funds, etc. That's return. That is just movement of money. The sovereign funds have raised, Mumtalakat has raised the bar. I want return on investment, but I also want, a partnership, and we're building the future together. That's a big bar. It's not easy for mid-market, even if you have 70,000 employees like we have in the various companies. This is over 30 plus companies. It is a very high bar to jump that needs support. So you need to build teams in place locally to support them. It takes both sides, one to push and one to etc. And picking up on what you said before, I agree with you that the glue that glues us together, and also His Excellency this morning said it, is execution. The execution here, all of a sudden, is better than the execution there. I won't go on your this morning panel again at the end of the thing, but the execution here is definitely better than the execution where I come from.
Behdad, if I've got the numbers right, 95 billion, 60 to 65 on PE, the rest in private credit. Concentration risk comes to mind. You are a broad investor. Is there a private deal that got away from you? Is there an area if I said to you, what's the one prize that you'd like a chunk of in private markets, what would it be?
So I'll address both questions. Biggest opportunity for us remains technology, software, back to digital infrastructure, AI. We're early days still of transforming every industry, every workflow. Biggest opportunity as an asset manager for us, and I think frankly both in the region and globally, remains private markets, private credit. We'll get to
that in a moment.
Private markets broadly into the retail, high net worth, democratizing, institutionalizing a lot of the private markets to giving access to high net worth families, individuals to invest in some of the great deals, some of the great companies, in some of the yielding instruments that a lot of folks in this panel, giving investors access to invest behind McLaren and a lot of the good companies that His Excellency has turned around, fixed as a sponsor. So I do think that's early days, and that's an opportunity, frankly, for private asset managers to grow. You said, would you rather own an asset manager or a bank, or insurance company? But I'd say access to bringing products and investments to a global base of retail investors that don't have access to those private products today.
When I see a principled smile on a panel, the journalist in me sort of comes back to His Excellency. You smiled when he said McLaren, and obviously it's a phenomenal consolidation of a role. Are you actively looking again in sports? If I said to you in 2020, if we come back in a year's time, sir, hopefully you'll have me back, will I see Mumtalakat being more substantial in sports? Is that what you're drawn towards? Because it's quite a big theme in terms of investment.
Look, we're attracted to good businesses, regardless of industries. I know we've seen a tremendous shift in sports, as you mentioned. We have an association with McLaren, and we've seen the F1 industry transform since Liberty Media took over, and today, the valuations of these companies are just going north and north. Same thing with Chelsea and the Premier League. So we're seeing the vertical of sports show to sovereign wealth funds for good reasons. They're not trophy assets. They are businesses that are growing, top line, bottom line, multiples are growing. So to answer your question, am I looking at sports? Yes, if the fundamentals support me to invest in these sports, then as long as it's not Chelsea, because I'm an Arsenal fan.
He really was. He's just poking away about Chelsea.
This is why sports is such a good investment, right? Regardless of topic, I think we own 32 some odd controlled companies, but I want to talk about McLaren and he wants to talk about Chelsea. So that's hence the reason why everyone cares about sports.
Exactly, and I want to come back, so I'm not going to start having a go about Chelsea. We have 5 minutes left on the clock. There's one big theme in the world. I've spent 5 days talking about it. I'm told that there is no systemic issue in regards to private credit. Stop saying it. Stop talking about it. It's merely the end of a very long cycle, and we're going to have some gentle spread widening. Some people said that to me in 2008 and in 2000, and even before that. Behdad, talk to this audience. What do you see in private credit? Is it well managed, well run, and no systemic issues?
Yes.
Sir.
So over 90 some odd billion, only 7 of it's private credit, so I'm not going to talk up my book. I agree with the notion that there is no systemic risk. There was 2 alleged cases of fraud. We are a big issuer and consumer of private credit for our private equity-backed companies. I'm here to tell you as an issuer, the private credit underwriters do more work, are more diligent, have better documents, far more than banks who underwrite, syndicate, don't take risk. Ultimately, they're not principal holders and syndicate. So, yes, I'm a believer in there is no systemic risk. This is not 2008. With CDOs and leverage upon leverage. This is well underwritten sponsors. Underwriting largely floating rate risk, at 30 to 50% loan to value, in a world where rates are going to be probably between 2 to 4%, at least in the U.S. risk-free rate, generating high single digits, low double digit returns, and I think it's early days. I think it's a big load of nothing, frankly.
Okay, I'm going to come and see if there is. I've only one more financial crisis left in me before retirement. So, Andrea, jump in here. So it's a big ball of.
No systemic risk. The beginning of private equity was the same. You saw some bankruptcy, etc. People were saying private equity is dead. It's grown from strength to strength to strength. So it's normal growth of the business, essential for the economy. So I'll go even further. And we have 18 billion in private equity. We only have 1.2 billion in credit, and we are customers more than anything else. And I can attest to what, compared to the banks, which are obviously very good, highly regulated, we have the best professionalism on the opposite side. So when we get a private credit, it's professional, it's thorough. I don't see any private risk. I see a lot of news coming up, though. You're going to have to survive the next 12 months where, it's a newspaper interesting story. Every time private credit will go, they will predict the end of the world.
And we know what happens to newspaper. It's called fish and chip wrappers in the United Kingdom or in Ireland. Hazem, a very quick comment from you just on the context, how you see the risk, and then the closing comment to His Excellency.
Good. All right, so when we started BlueFive, the theme was very much the Global South. And of course, you can't ignore the credit strategy. And I have personally struggled with the credit strategy. Why is that? First, I'm very, very envious of these two gentlemen, particularly Behdad. Credit investing needs to go hand in hand with liquidity.
Yeah.
And the reality is, the liquidity today in the financial markets across many asset classes only exists in the US and to a lesser extent in Europe. It does not exist in the GCC, it does not exist in Southeast Asia, even China doesn't exist yet. Okay, so that's why investing in credit needs to go hand in hand in having a liquid market where these positions could be traded, could be upsized, downsized, whatever it is. The lack of liquidity concerns me. Perhaps that means that the private credit market in many different parts of the world outside the US and Europe are perhaps a bit too early. It may take another decade, I think, to get to the liquidity. Building liquidity is the fundamental piece of any investing. And so that's why I'm more, with my kind of Global South GCC hat, I'm more bearish.
Okay. Your Excellency, closing comment to you. Your role is to absorb not just the headlines, but to try and look at life through a longer term prism. When you see all these headlines, all these discussions, Jamie Dimon seeing cockroaches, people like Behdad saying, going, it's a ball of media fluff. Just put a context around it for us in terms of how you see private credit, sir, to close.
No, look, for us, I think private credit is essential. Banks can't do everything, can't fuel growth, and we've seen tremendous growth. And as long as what Behdad and the panel mentioned, as long as your underwriting fundamentals are correct, your covenants are correct, this asset class is here to stay. And to be honest, will expand not only to North America, Europe, but to this part of the world. It's much needed to fuel all this growth. So I'm quite bullish on private credit. There could be a correction, there could be volatility.
A correction would be healthy.
Well, will be healthy. The people that have underwriting standards that are weak will disappear, the covenant light will disappear, and then the strong asset managers that have the track record will continue. So private credit is here to stay.
Gentlemen, thank you for the conversation. Excellencies, Royal Highnesses, gentlemen, thank you very much for your time.
Thank you.